Good evening, everybody. We just want to welcome you to Legacy Conversations this evening. And we're going to talk about, as John would say, the C word, credit. We're going to talk about credit today. We have some special guests with us tonight. Of course, we have John. He's a two-time attendee.
Two-time, back with the press.
Back to back. And we have Joe. Joe, please say your last name.
Tomaceski.
Tomaceski. He is here from COmmonwealth and the vice president, right?
Well, we got two VPs.
Two VPs. And look, you got to be pretty special to get two VPs in the room. So I'm excited about tonight. It's going to be informal. If you guys have questions, please feel free to drop them in the chat. We want to hear what you have to say. This is for you. It's for the community to find out about credit. What is good credit? How does credit help or hurt? And what you have to do to purchase a home. So we're just going to get started. And let's say, well, how does credit help? Or how does it hurt? What is credit?
Well, and that's a good place to start, because a lot of times, and I handle first-time home buyers, I'm on the mortgage side, so I deal with a lot of customers coming to me and say, Joe, how do I get approved, right? And when you get a pre-qualification, the first thing we take a look at is credit. And credit is nothing more than your accounts and a history of those accounts. How have you paid your bills on time? And we're talking student loans, credit cards, installment loans. Because when you get a mortgage or when you get any type of loan, credit's one of those fundamental pieces how we determine if you're going to pay us back. How have you paid your bills in the past? Right?
So it's like a relationship.
It's a relationship,
okay.
Right. And most credit accounts go back 7 years. So we're looking 7 years in the past and seeing what kind of credit do you have? How have you paid on those? And more importantly, if you do have some issues, you miss some payments, you have some collections or delinquencies, how long ago were they? Have you rectified that situation? Have you improved upon it? And is now those issues in the past, and now everything looks good? So credit's a starting point. And most people think credit score equals credit report. It doesn't, especially if you try to purchase a home. It's really the credit score plus the entire history. And when we pre-qualify someone, we really dive deep into that. Most pre-qualifications take 45 minutes to an hour, and most of it is spent on the credit. We want to see what the credit score is. The higher your credit score, the more likely you are to get approved, the better the interest rate. And if you have to have mortgage insurance, and we won't get into mortgage insurance that much, but mortgage insurance is nothing more than an insurance that protects the bank in case we have to foreclose on the borrower. And a lot of loan programs require this mortgage insurance. Well, if you have to have it for conventional loans, it's tiered based off the credit score. So the higher your credit score, the less you have to pay for the insurance, and that lessens the monthly mortgage payment.
Got it.
So credit is so vitally important, and some loan programs, excuse me, have credit score requirements. Even some programs that help with down payment and closing cost assistance require a certain credit score. So Pennsylvania Housing Finance Agency has some great programs where you could get money that you don't have to pay back as long as you live in the house for 10 years, but they require a minimum 660 credit score for that program. So they're, credit is so important to the process, and that's why we start with credit, right? And I think it's important for people to realize, don't run away from the credit issue. The credit is the most important thing. If you're looking to purchase a home, start a business, whatever the case may be, you have to understand where you sit today. It's like going to the doctors, right? The first thing the doctor's going to say is, let's take some blood work, let's see where we stand, and then based upon that, what steps you can take to help improve the situation.
And so you saying about credit and how people would run from it, and that is very true, and it almost gets intimidating sometimes, credit.
Sure.
So why do you think that's so? Like, have you seen, like, or had anyone acknowledge that, like, why they felt?
There is a huge, and it's almost like a psychological effect where they say, hey, I don't want to look at my credit. Or a lot of people say, Joe, I want to buy a house. And I say, okay, let's pull your credit. Oh, I don't want to pull it. I'm not comfortable right now. I'm not emotionally ready to do it. So I think what we do at First Commonwealth is we take a different approach, right? Where we bring in outside organizations, HUD-approved counseling agencies, community organizations that can help with that initial step, where we say, okay, so you don't want to do a hard pull, we don't want to make it official, but there's some good educational partners that we have. And when a nonprofit pulls credit, it doesn't count, no one can see it. It's a soft pull. So a lot of times if a customer is afraid, we say, we have some great educational resources in these community groups. They can pull your credit, it doesn't impact it, they can see what we see, it's the same credit report, but it gives them some confidence of, okay, maybe I can do this. Or if the answer is no, then we can work together to create a solution so that no turns into a yes.
Right. And so, that's one thing that I feel like is very important, especially to many of, or much of the community that I serve, is that, okay, so we know our credit isn't where it should be.
Sure.
But we don't have a plan. You know what I mean? And that's where people get hung up and get afraid, because it's like they've been told no, but don't have a plan to move forward.
And that's what we always want to create a solution where we could say, it may be a no today, but if you work on this, and it's important that people understand what actually comprises your credit score, right? It's payment history, it's credit utilization, how much of the available credit you're currently using, length of credit, new credit, and the last one is your mix of credit accounts. And people don't realize that all of those factors play importantly into how your credit score is calculated. So for example, having 5 credit cards, but your available balance or your available limit 0 because you've used all of your credit limit, that's penalizing. You know, you're doing a good job by getting the credit accounts, but you're not using them correctly, and that has a negative impact on your credit score. So understanding how credit scores are comprised, working with professionals that work on credit, that can create a budget, make sure you're living within your means is vitally important as well. We're always interested in helping customers be in the best position possible when they purchase. And a lot of times that's acknowledging what has happened in the past, but creating that game plan. So you could say, I understand my credit score may be 630, but I want that 700 credit score. I want the best rate possible. I really want a house. That might mean, hey, I'm not ready right now, but I'm going to take the money that I'm saving, pay off some debt, and that's going to help improve my credit score. So sometimes it's as simple as paying off some debt to really boost the credit score.
Right.
You know, we've had some, I don't say issues, but situations in the past where, you know, we pull a credit score and there's no credit out there at all. And having the right partners, having the right relationships is just so important, because there's been times where Joe or other mortgage lenders have said, hey, John, through the retail bank, can you get these guys set up with a secured credit card? Start establishing some history. And I think at the time our minimum was like $300 you had to put to secure the credit card down. 6 months later, this person used the card the way that we kind of instructed them to. 700 credit score, pre-qualification, they're ready to go. We're ready to get in the home buying process. So often, you know, people, the credit, the C word, it's like, oh my God, I'm so afraid of it. And sometimes it's really simple solutions. It doesn't take long to get there. Other times, you know, hey, we've had people that we made some credit missteps, and there are options, there are different ways that we can go about working through that, but we have to have the credit conversation to get there. You know, if it's like, hey, I'm never gonna let you pull the credit. And you know how that goes. It's like, hey, I don't want to pull credit, and that person ends up with you. You're showing them a house. They will put an offer in. It's like, hey, I need something to say that you could buy this. And now we're in a worse position because the person's heart set on this house. They love it. You know, you're excited. You're like, I'm going to get them this house, and it's, hey, okay, we're going to pull credit, and now, you know, we're looking at a 400 credit score. Now we're in a bad position.
Certainly. I actually had spoken with someone today who, you know, they want to buy a home and it's their goal to do so, and that's where I love to be, is in helping them get to that goal. However, she felt like her credit wasn't where she wanted it to be, but she was using Credit Karma.
And I was going to get to that point next. All
Yeah,
credit,
talk about it.
all credit scores aren't treated equally.
Right.
So when you purchase a loan, we go by the FICO scores, and there's three major credit bureaus: TransUnion, Equifax, and Experian.
Right.
And we pulled the FICO scores for each. But what people don't understand is Credit Karma uses an Advantage score. So it's Advantage score, it's not a FICO score. So your lender's not looking at that Credit Karma score when they're evaluating your eligibility to purchase a home.
Absolutely.
The other thing is there's FICO scores for a variety of reasons. So when you purchase a car, you have a different FICO score than if you're buying a house.
Right.
Same thing with a credit card. So a lot of customers come and say, hey, on my Discover card, I get my Equifax FICO score and it says it's this.
Yeah.
Well, that's a different score than what mortgage lenders use. So it's important that if you do have questions, or you want to get some education, you want to build some financial confidence before starting that mortgage process, work with a HUD-approved counseling agency. They can pull the same credit score that lenders will pull. It's a soft pull, so it doesn't count.
Right.
And you can actually start it there, and then they can help you determine when you're ready to talk to a lender. So, you know, and that's the big thing is, if you're not afraid of that credit, right? If you say, hey, I want to do this, but I don't think I'm at that stage, that's okay. We have resources, we have great partners all throughout Pennsylvania that can help you navigate that. And it's a great idea, and we highly encourage financial literacy and home buying education. Even if you think you're good,
Right.
the reason being is that this is a huge investment. And we believe in generational wealth building, and home ownership is the primary tool for generational wealth building. And we want you to be successful, just not today or tomorrow, but 10, 30, 50 years down the road. If you understand what you're getting yourself into, getting a house, and if you take the necessary steps right now, those credit habits and tools that you use to purchase a home can serve you a lifetime. So we see it all the time. Someone purchases their first home, now they start a business, and now they want a business loan, or they want to get into investment real estate. But you still have to make sure that credit's top notch. So fostering those good habits before you purchase a home is going to serve you well in the future as well.
Yeah.
So I got a question for you, Joe, and I think this goes into that fear, the general discomfort with credit, right?
Yeah.
So talk to us a little bit about the difference between if you pull my credit to try to pre-approve me for a loan versus if I go to a car place and they try to pull my credit. Because I've had some clients that have had some bad experiences where, hey, I went to go buy a car. I walked in, my credit score was a 650.
Yeah.
Once I left that place, I got this update from Credit Karma that my score went down to a 592.
Yeah.
So what's the difference there? What's that look like?
So one of the nice things that recently happened, and this happened under the Obama administration, they actually changed the rule. The Consumer Financial Protection Bureau, one of the primary governmental agencies that regulates mortgages and banks, encourages you to shop around. So they created that if you pull credit and work with different lenders, then a credit pool would get aggregated. So basically you could pull with 5 different lenders, but it's treated as one credit pool. So it doesn't have that impact on your credit score. So a lot of people think that, sort of like going to the car loan or the car dealership where they pull 50 different credit reports, that's going to happen when you actually shop for a mortgage. It's not. And there's a couple things, right? There's getting pre-approved, then there's shopping around for the best product. And we highly encourage people to shop around, get the best deal possible. So, but with that being said, you know, this goes back to the general fear. I don't want my credit ruined because I pull it.
Right.
You know, if you're in a good place, a credit pool usually only deducts about 2 points on average off your credit score. So if you've worked on your credit and you put yourself in a great position and you have a 6 or 760 credit score, a 758 still going to get you that house, right? And I would highly encourage, and I would not discourage anyone from pulling credit if they're shopping around going, I don't want it pulled anymore. There are protections in place that encourage you to shop different places.
Yeah.
Now, is that only in mortgage now, or does that apply to those car places as well?
It's supposed to apply to the car places as well. However, that 45-day period I think is lower for shopping for a car. I think you have 10 days within a window.
Okay.
So it's not supposed to hurt you, but it has in the past. And that's why it's important to stay up to date and work with professionals.
Right.
Because, you know, if someone calls me and say, Joe, I don't want you to pull my credit, but I want to buy a house. And I say, what's the problem? Oh, I don't want my credit score lowered. Okay, did another bank pull your credit report to qualify you for a purchase? Yes, they did. They pulled it a week ago. Okay, I can do the same thing and it's not going to affect your credit.
Right.
You know, people don't realize that.
No, they
But
don't.
and that's why education is important, and that's why we love doing this today. But also encourage homeowners to go through home buying education because they get this, they get the tips, right? And I always say, as a homeowner or a home buyer, you're the CEO of your home buying journey, right? You build your team. You get to pick your realtor, you get to pick your lender. But I always tell them the same thing too. You want to be educated about the process, and you want to pick people that really know what they're doing. And if you have, and this is why I'm going back to this as well, because there's such an emotional connection to credit, and some people are definitely afraid of it.
Right.
Is you come to us, we can connect you with a professional that can help you navigate that. You know, and there's our organizations, I work with a few in Pittsburgh that deal with psychological barriers of poverty, right? Breaking those bonds.
Yeah.
You know, we've helped individuals that have been homeless within the last 5 years and now they own a home. But it takes time, it takes effort, and we work with customers, you know, your home buying journey might be 6 years and maybe 3 years, maybe 12 months, 6 months, 3 months, right? We like to meet customers where they are.
Right.
And if you're in a position, before we even talk about credit, we can have that conversation. And we just like to, there's no pressure. You know, we love to sit down with customers, go through what their issues are, what their concerns are, and then we customize a game plan based on what they're comfortable doing.
I love that, Joe. I love that. So we got some questions.
Sure.
So how do you find a reputable credit assistance program, and is the bank or credit union the best route?
So the short answer is we have a list of organizations that we work with. And there's online, if you type in HUD approved counseling agencies, these are agencies that meet the Department of Housing and Urban Development education guidelines. And we highly recommend that you take a look at those resources. There's tons of them out there. But there's also some good education online as well. Fannie Mae, one of the largest conventional entities out there, they have an online class called HomeView. Yeah, I think it's HomeView. Yeah, HomeView.
Okay.
You could Google it, take a class. You could get some good information just by attending that class online. So I would say there's plenty of resources out there, but you know, if there's any questions, feel free to give us a call. We can give you a link where you can go and find.
And we'll
some
put that
resources.
on. We'll make sure everybody is able to.
Yeah,
contact
and
you
then
on that.
I think the second question was bank credit.
Is the bank or credit union the best route?
So you know, there's banks, credit unions, and then there's brokers, right? Independent companies that shop around, try to get you the best rate. I think it's a misnomer that a bank can't offer you the best rate, because at First Commonwealth, not only do we offer our own products, but we also work with different lenders. So I can act as a broker and then offer my own products as well. So I think the short answer is it's good to get several opinions. So credit union and bank is fine. Working with a broker is fine. But I think by getting several opinions, you're gonna see what am I eligible to do. And what's nice about banks particularly, now some brokers have special programs, but banks, especially banks in your local area, they have a CRA obligation, and that's a Community Reinvestment Act obligation. So we're required to help customers in our communities obtain loans. So we're incentivized by the federal government to do so.
Okay.
So we have special programs, first-time homebuyer programs that eliminate mortgage insurance, minimize down payment requirements, have a little more flexibility in underwriting guidelines that can help first-time homebuyers, especially those purchasing in the community, obtain a loan. So it's just not FHA or conventional.
Sure.
There's FHA conventional first-time homebuyer programs. And then because we work with first-time homebuyers, we also have access to down payment and closing cost assistance programs that can help minimize out-of-pocket expenses. This goes back to our philosophy of putting customers in the best position possible when they purchase. The idea is buying a home's expensive, but we want you to be prepared that after you purchase your home, you still have some money in case unforeseen job loss or medical emergency. We still want you to be able to make your payment. So one way that we actually help customers is try to identify programs that can help with the down payment and closing costs so you get to keep more money in your own pocket.
Joe, would you mind, I know we don't want to be product specific, right?
Sure.
Would you mind talking about our CRA product a little bit more?
Absolutely.
We talked about this
Yeah,
before.
yeah.
I'm a really big fan, and I've seen multiple times what this product does for people.
Sure. So we offer a 1% down, no mortgage insurance option for first-time home buyers purchasing in low to moderate income census tracts or for low to moderate income borrowers. And by low to moderate, the Department of Housing and Urban Development has a chart that we use, and it's 80% of the area median income based on household size. You don't need to memorize the chart. We can help you with that.
Yeah.
But the program is designed to help families that are having difficulties finding programs that work for them. And what's nice about our program, we have some flexibility in underwriting. It's our own program. We don't sell it, so we don't transfer it on the secondary market. It's a 620 minimum credit score, but it's a conventional loan. And we don't run it through an automated underwriting system. So the dirty secret is when you go to a bank, yes, your loan officer's looking at everything. They're calculating your income. They're looking at assets. But for many programs, it's actually put into a system and ran through a computer program. And the computer program says, yes, you're approved, or no, we need more information, all that stuff. At First Commonwealth, our first-time homebuyer program doesn't go through that. Instead, they talk to me, they talk to our team, and we go through and we take a look at the narrative and we take a look at the information. We're all about doing common sense loans. So there may be some situations where a customer doesn't qualify for FHA or conventional, but we can then use that first-time homebuyer product, and we have certain guidelines, compensating factors that can help mitigate if there are some deficiencies that FHA says no, we can't do this, or conventional. So I always say the great thing and the advantage of that program is when you talk to someone about credit, they may have some credit issues, but we could say, okay, yes, but this is why I like the file. A computer system, if you run an FHA loan, doesn't care about that. They're just saying based on your credit, it's a yes or no. We're saying, okay, it may be a yes, this is what we're looking for, or hey, it may be a no right now, but this is how we can, and we have direct communication with our underwriters. We work closely with our team. This isn't something where, you may go to a larger financial institution and they may say, okay, yes, I have to talk to my manager, and the manager's gonna talk to the underwriter, and then maybe within a week, we're gonna get an answer. We're still a community bank. So if John has an issue, if I have an issue, we're only 2 or 3 people away from the top of the bank, right? We don't have to go through layers and layers of management. We can get answers, we can sit down, and one of the nice things is it's a collaboration. So if I have an issue, I can bring John in, John can bring me in, we can go to our management team, we can get everyone that needs to be part of it in short order, and sometimes we get answers within the same day going, I like this is what I'm thinking, this is why this makes sense to me, and we can get an answer within a day or 2.
Yeah, no, that's awesome.
But
That's awesome.
He doesn't usually do this, but I will do it for him.
Okay.
What I love the most about that product he was talking about and it's not one of the C word things. It's just another mortgage misnomer.
Okay.
It's 1% down.
Right.
Now, of course, there's some income guidelines that we have to follow there, but before I bought my house, I was like, I need to save up to get 20% or 10%. And then as I started learning more about the industry, it's like, oh, there's stuff out there for 3%, 5%, 1%. And just having that knowledge that, hey, I can have a real meaningful conversation with somebody and talk about having 1% down on the house that I want to live and build a family in. You can't beat that, right?
Yeah, no, that's awesome.
And if you think about it, and you're right, so let's say you purchase a $200,000 home, 1%'s $2,000.
Right.
On a conventional loan that requires 5% down at a minimum, that's $10,000. That's $8,000 less that you need to bring to closing, just because of the product. It's not a grant program, but at the same time, it almost is, because we allow a lesser down payment.
Certainly.
And then that's $8,000 that you still have left in your pocket.
Certainly.
And that's why we also couple that with grant programs. What's nice about our program as well, unlike FHA or conventional loans, we don't have a cap. As long as it's a soft second mortgage where you don't have to pay that back, it's either fully forgiven or 0% interest, and it's only payable once you sell the house, is FHA and conventional loans have a cap of how much money can actually go in. So combined loan to value of 105. As long as it's truly a deferred second mortgage, we can continue to stack programs upon programs upon programs. And what's nice about that is, like we were talking about Pennsylvania Housing Finance Agency, they have a program where you could get 5% of the purchase price towards down payment and closing cost assistance. So let's say you purchase a $200,000 house. That's $10,000 to help lower your down payment and closing cost assistance. We also participate in the Federal Home Loan Bank of Pittsburgh's First Front Door program, which is a match program. For every dollar you contribute, you get $3. So if you have 1667, you can get $5,000 in a deferred program, and it's fully forgiven after 5 years. Well, you can actually combine those two programs together. So if you think about it, that's $15,000 of down payment and closing cost assistance that can be used to minimize your out-of-pocket expenses. We like to have customers have 1% of their own funds, and PHFA does too. But on $200,000, that's $2,000. Whereas most cases, that's $15,000 for a normal program, or even higher.
Right.
So there's creative ways of helping customers, and our approach is, we're not salesmen. Right, we're not there to sell anything. We're talking about car dealers, you come to us and say, Joe, I want to purchase a home. The first thing we're not doing is opening a door to a car saying, come on, take a look at this model. You should buy this. Instead, I view us more as financial advisors. We're giving opinions. We're creating options. We're helping you understand different programs and different options. But it's working with the customer to make sure that they find exactly what they want, and trying to identify what could happen also in the future if they follow some creative steps as well. We talked about credit. So we may be able to pre-qualify someone today. Maybe they have a 630 credit score. I might say, hey, you can do FHA today. This is what it would look like. However, if you pay down some debt, you wait till First Front Doors open, get that $5,000 grant, you get your tax refund check. Now money's not tight, you wait 6 months, and get that credit taken care of. Maybe we're looking at FHA, conventional, first-time homebuyer programs, and different options as well. So, we're not trying to sell you on, yes, this is what you need to do. It's, you can do this, but here's what it could look like in 6 months if you follow this pathway. It's about creating options.
For sure. So we have another question. We have several questions now.
They like us.
Yeah, they want to know. So it says, which online credit monitoring app uses FICO? So where can the consumer go to?
They can actually go to myfico.com. So FICO Score themselves actually has a credit monitoring system. Actually, one of our organizations, HUD Approved Counseling Agencies, WAVE, in Pittsburgh, encourages customers to use myfico.com, and they can actually give you the mortgage FICO score as well, and they have a monitoring system as well.
Yeah.
It is a pay site, so you do have to sign up for a subscription.
And sometimes putting a little sweat equity into it,
Yeah.
you know what I mean, makes you, build it and,
That's,
and do better
that's
by it.
right. And going to, trying to allay fear of
Mhm.
credit, one way to do it is to make sure that you're on top of it and you're following it and
Yeah.
things of that sort. So my FICO has a great
My
program.
FICO.
Yeah.
Okay.
Can I add something there?
Yeah, absolutely.
So, and, I know people badmouth Credit Karma. It's not going to be the score that we'll use, but I appreciate Credit Karma in the fact that it can get us close, right?
Mm.
If I'm talking to somebody and they have a Credit Karma account, there's a lot of information that I can get just from looking at that Credit Karma account. We can start to see, hey, what's your payment history look like? Have you missed payments? Are you 100% usage on all your credit cards?
Mhm.
And what I like about Credit Karma is it's thoughtful enough, or people are thoughtful enough that, hey, I care enough about my credit that I have this Credit Karma
True.
thing. So if nothing else, I think something like that, it's just a great baseline.
Mm.
Hey, so is that going to be exactly the number? Is that exactly the credit file we're going to pull? Probably not. But if you're thoughtful enough that you're looking at that, I feel like that's a great place for us to start at.
Mm-hmm. No, I agree. I don't disagree with that.
Mhm.
I agree, for sure. So the next question is, any credit repair companies you can recommend, and do you recommend using these companies in certain situations?
So there is a distinction between credit counselors and credit repair companies. I'm always a big proponent of credit counseling, and the reason is usually most credit counselors are more comprehensive. It's just not about the score, it's about the habits,
Mhm.
right? So I want someone to go over budgeting so that not only do you repair and get your credit utilization down and get that credit score up, but you're creating those good habits that you're gonna be able to use in the future. So if you go to a HUD-approved counseling agency, yes, they'll work with you and take a look at your credit and create ways to help improve your credit score, but they're creating that budget as well so that as you correct your credit, you don't take those missteps. You're living within your means. You know what you should be using credit-wise. Whereas credit repair, there are some good credit repair companies out there, but then again, there's some out there that I would not encourage.
Right.
I've seen credit repair companies, they just say, hey, dispute everything and see
Right.
what sticks, right? That's not an effective strategy because, especially disputes, right? You want to have, and if there are things that need to be disputed, you want those disputed and taken care of before you even start the mortgage process. Because what happens is when you dispute an account, it's taken out of your credit score consideration. So your credit score is not accurate as it's going through the dispute, right? So we want to make sure that disputes are resolved, that everything's taken care of before you start the mortgage process. Audit credit counseling or credit repair companies would just say dispute everything, see what sticks. And what ends up happening is customer sees their credit score jump up because that collection account is no longer being factored in, so it gives a boost to the credit score. They think that things are going, and then you come to a lender and say, hey, you have 10 disputed accounts and you have a 700 credit score, but these are all delinquent, so once you remove these, your credit score is definitely not 700. So credit counselors take, I think, a more deliberate approach, and also it helps the customer take accountability of their own credit, and that's important as well. So they can tell you how to dispute, but they won't do the dispute themselves. That's a good exercise for the customer to go through, saying, yes, this is wrong, this is the documentation, or I paid this medical collection, I have my receipt. Call them up, provide the evidence, get that removed. Because like I said, after you purchase a home, it's now incumbent upon yourself to take care of your own credit. And if something like that happens again and you're paying for credit monitoring, you want to be able to know how to take care of that in the future. So I think credit counseling agencies do a great job of just so much more than fixing the credit is actually creating those good habits.
Certainly.
So here's a question for you, and it can be a hot button topic for me sometimes because I've seen this work out really poorly for people. in the mortgage world, how do you guys feel about settled accounts? Because I know in the commercial sense, how we look at those, how do you guys look at settled accounts?
So if it's a settled account, it's already factored into the credit score, it's not disputed.
Mhm.
At that point, as long as it shows a zero balance, we're good.
Mhm.
We're good. Now, the one thing I do wanna say though is if someone has a collection or derogatory account and it needs to be paid off prior to something of that sort, at that point, we encourage them to try to negotiate something and get a payoff for less, as long as it's paid off in full, as long as they're saying, you won't owe us another penny afterwards. So at that point, it's not gonna really affect because it's already being factored into the credit score, as long as it's been taken care of.
Yeah.
Now, they do get hit, their credit score is less than what it would be
Mhm.
if they would have paid it off, so
Right.
it's already factored into the score.
Because I know sometimes in the commercial side, commercial lending, if there's a settled account, banks don't really love seeing those. Especially if it says on the credit report, you've probably seen this before, settled for less.
Mhm.
Because what that says to the bank is, think of it this way. Denise, can I borrow $5 from you? You say yes, you give me $5. And eventually I get to a point where it's like, hey, you know what? I'm not gonna give you your $5 back. Here's $3. You gotta be happy with that.
Okay.
So then when I ask Joe, hey Joe, can I borrow $5? He kind of looks at me like, well, I know you gave her 3 back. So why would I have confidence that if you give me 5, if I
Right.
give you 5, you're giving it back?
Right.
And it does report as derogatory.
Mhm.
So even if you settled for less, it's still a derogatory account. So it does have a negative impact on the credit score. So if we go with that automated underwriting system, at that point, the system might say, yeah, we don't like it.
Mhm.
And that's why our first time home buyer, I think our program's just so different, and I think why it's one of the reasons we are so successful in what we do. A settled account, as long as it makes sense, as long as all accounts are settled and stuff like that, it's creating that narrative of what happened, and is that an ongoing concern, or is that just something that's happened in the past and now you're in a much better position? So I think the narrative's important on that. So it's different than if all the accounts are settled for less. Then now I'm starting to look going,
Right.
you don't have any accounts that you paid on time and
Have
that
you
are
ever
claimed-
paid anybody?
Right.
That's right. So I think the narrative's important.
Mhm.
And that's why working with a local reputable lender is so important, because we know the area, we know the programs, we can sit down, and you're just not talking to someone over the phone going, hey, I wanna purchase a home, or I wanna start a business, I need a commercial loan, I need to, buy investment property, whatever the case may be. It's sitting down, going through that narrative. So if we do have a settled account, I can talk to the underwriter and say, that's not a problem, this is what happened,
Mhm.
and it wasn't their fault, we have documentation, and then the underwriter's gonna say, okay, I'm okay with that.
Yeah.
Because we've done the legwork.
So it goes back to when you were talking at the beginning about having a team.
Mhm.
So like it's like having relationship, being in a relationship with your team, and working together.
Absolutely, and that extends from lenders, realtors,
Mhm.
the borrower themselves, the organization they work with, the home buying education organization.
Yeah.
It does take a team,
Mhm.
and that team extends even further to insurance agent when you get your homeowners, home inspection, right? So there's so many options that a customer and resources that a customer has as they go through this journey. But I think the biggest thing, and why we're talking about credit today, is that is the first step. That is the first thing a lender looks at. That's the first thing you need to get under control. The first thing you need to know where you stand in your journey. Because once you know that, right, you might have $50,000 in the bank. You may have $100,000. You may have $1 million in the bank. But the lender's going to say, okay, if we don't trust that we're going to get our money back, and based on your previous payment history,
Mhm.
then you might not get that loan, even though you have some of these compensating factors. So
Right.
working on credit is the first step.
It's key.
It is key.
Yeah, for sure.
I call it the keystone of the home buying journey because
It's so much more mature than the C word.
Oh yeah.
I just go with the C word. Let's talk about the C word.
Credit's not a dirty word. It really isn't. And actually, if you have your credit in order, and you talk about getting those car loans, right? Your credit is fantastic. You own a home. You do the stuff right. You pay your bills on time. You don't even have to worry about going to a dealership anymore. You get the lowest rate. You're walking in. They're saying, hey, listen, whatever you want, you're getting that best deal possible. Same thing with buying a home. We talked about how your credit score determines interest rates and mortgage insurance rates, and your higher your score, the lower the interest rate. You're getting the best deal possible.
Right, for sure.
If you take a look at a comparison, right now conventional loan might be 5.125%, 5% even. But you have a lower credit score, closer to 6% or even over 6%. Now you take a look at the $200,000 loan amount, you might be talking, hundreds of dollars difference in monthly payments.
Absolutely.
So at that point, the amount that you can actually afford is less if you have a lower credit score because of the interest rate.
Interest rate, yeah.
So credit is not and that's why you call it the C word, but let's just call it what it is. It is the keystone of what you're doing, and it is so vital to understand where you stand, how you can improve it, because putting yourself in that best position, it's gonna work wonders.
Absolutely.
You know what? I think another important thing about credit is just the confidence. I remember in my 20s when I messed my credit up, gonna go get a car loan. And it's that awkward conversation where it's like, hey sir, does your mom live locally? You got a grandma, a girlfriend, anybody go sign this thing with you? I went to go look at a car last week. I went to go look at a car, and I got a bug, and I was like, you know what? I need a pickup truck. Went to go look at it that day. They're like, hey, we're gonna sign the paperwork. Can we pull your credit? Yeah, go ahead, pull the credit. Pull the credit all day. Here's the pay stubs. Go ahead, do what you gotta do.
Yeah.
They come back, sir, here you go, here are the keys, we just need you to sign here, we'll be out of here in 15 minutes. The confidence to be able to go in and say, hey, I know where I'm at, I'm good. Feels amazing, but it started years ago with, hey, I know I messed this credit thing up, like, what do I gotta do to get back?
Yeah.
And that education piece, right? That questioning of what do I need to do, so important. And talking about looking at, especially first-time home buyers, but looking at different demographics, right? When you have studies that show that Black home ownership is at a 120-year low, that actually home ownership rates are lower than when it was legal to discriminate, right? And it goes back to, they don't teach financial literacy in the schools. You have to learn it whenever you're out of school. You have to make your payments, you have to go to school, pay back your student loans, and you go, what do I do now? And that's why I think it's important, and one of our duties as a financial institution is to provide that education to help with issues that we see out there. And I think that's the biggest thing, is that educational piece, John. We have resources, we have programs and all that stuff to help with that. And I think that's the thing too, is the C word, the credit word, yes, you may be afraid, but that educational piece, and I'll keep on going back to foundation, but ask the question, going, hey, I know, I think my credit's not where it needs to be. Can you help me?
Right, absolutely.
And I think that's the biggest thing. And I love this too. This is after hours. You're not walking into a bank. You don't have to get dressed up and go, hey, I need a loan. Let's hope we can get it. Let's have that conversation before you even think you're ready to do it. Let's get that process started now.
Absolutely.
You start the process, you build a good team, you have resources. Not only does it help to improve your credit, it builds financial confidence. But by having that team holds yourself accountable to follow through on that game plan, but you have a support system so that, you know, you can go through it and go, okay, yes, I made my payment, everything's good, my credit score's improving. I get calls from customers just giving me updates. Like, hey, my credit score jumped 20 points, you know, I'm gonna keep on going, you know. And that's important to see as well, is we're here to say, okay, great. And if you do have a trip up, it's okay, right? Life happens. Let's get back on.
And I think one of my favorite things, and I had this happen last week, I have customers that I started with them 5 years ago when I first got into the industry, and their credit looked very different. And now we've done loans for them, they own businesses, but they'll still send me pictures of their credit scores. It's like, hey, I made it above an 800, that was the goal 5 years ago. I'm at an 811 now. And it's always a text back like, hey, awesome, man, so proud of you. Like, can I give you another loan now?
Right.
But, you know.
What are you looking to buy?
And that's interesting you say that, because I have customers, like old files, I look at the credit score and I see their credit profile now, and I don't even recognize it anymore. Just going, this is different. This is different.
That's
you know,
awesome.
You see collections, charge-offs, collections, judgments, and you see the new credit going, okay, bills are paid on time, the collection accounts are gone, everything looks good, credit score's great. It's a totally different, and if you take away the name and you compare them, it's like, okay, I can do different people. I can't do anything with this, I can definitely work on this. But
So tell me, is your product, is it local? Like, do you have products that works in Mercer County, or is it just wherever your branch is?
So one of the nice things is, like we were talking about first front door, that can be utilized anywhere. So that grant program, our first time homebuyer program can be utilized anywhere, you know, in Pennsylvania. Pennsylvania Housing Finance Agency can be used. If we have anyone in Ohio, we participate in OFA. First front door though can be used in Ohio to purchase a home in Ohio. So we have programs for different areas. You know, there's a lot of money inside the city of Pittsburgh, but there's money outside the city of Pittsburgh as well. We work with Dawn Services here in Newcastle to help families. So we try to help families anywhere that they're interested in purchasing a home.
Awesome. So this person says, I paid my debt all down, but there are late payments, remarks on my credit report, closed accounts. How can I increase my credit score and quickly? How can I do it quickly?
Okay.
Increase it.
Yeah, so the short answer is continue making the payments. It sounds like there's no more things that the customer can pay off or the borrower can pay off. I would not dispute anything that's not, you know, that's accurate, right? That's not gonna help. Yeah, it's gonna increase the score, but as we were talking about, it's not gonna have that big of an impact.
Right.
Sometimes the answer is continue doing what you're doing and you're gonna see that score increase. But without looking at it, John talked about secured credit cards, sometimes building new credit or opening up a new account that has a positive payment history. Yes, it may have a negative impact at first, but as you continue making on-time payments, it's gonna increase. So the short answer is, without knowing the credit history, work with a licensed professional, work with a good counselor that can help you through that. So that because credit is so individualized,
Certainly.
I don't want to give any advice that may be counterproductive. So it could be as simple as opening up new accounts to reestablish good payment history. It could be as simple as continue doing what you're doing, making your payments on time, and that's going to improve it as well. But it sounds like everything's been taken care of.
I mean, and I don't think I'm speaking out of turn here to say, once we get off the live, you can put my email address on, you can put Joe's email address on, so if people have very specific questions,
Yeah, we can take a look at it.
we can take a look at that stuff and break it down and see what we can do, and if we can make any suggestions, we can do what we do.
Okay.
Yeah.
Great. No, because I definitely want, you know, everyone to have the opportunity, because like we talked about earlier, credit has, you know, not been, you know, the polite conversation, you know what I mean? And it's like, if we could sweep it under the rug and not have to deal with it, you know? And so, because I know when I went to college, my first day on campus, there were credit card, companies there pushing credit cards on every student, and you got a free T-shirt and a cup.
Yeah.
Come on.
Yeah.
I remember my first credit card. It was after my senior year of high school, before I went to college. I was in Disney World and I had a backpack. My backpack broke. There's a credit card company that has backpacks. All you got to do is sign up for the credit card.
Yeah.
I sign up for the credit card. I forget about the credit card that I signed up for. I get the backpack. I'm good. 3 weeks later, I got a $5,000 credit card in the mail. Oh God, it's giving me free money. Let's go. I was so excited. And just swipe, 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 swipe. My mom's like, you gotta actually pay that money back.
Yep.
What do you mean? No, this is a credit card. I'm
Right.
good.
Right.
So I like you said, that credit conversation, the credit knowledge, the education piece, so important.
Absolutely. Absolutely. And that's why I love to do these lives, and I love to bring education. For my community, because we didn't sit at the dining room table and have these types of conversations. So although we're, many people are adults that, are on this live right now, like, we need that education, and we need the financial literacy, and we need to know how to budget, and we need to know how to save, so these are important, keys that will help grow the community, and then help, the Black community own property. You know what I mean? Because it just wasn't talked about.
Yeah.
So these type of conversations are appreciated. So we certainly thank you both for coming today. Any last things? Any last comments, or what you got, Joe?
There's hope.
Yeah.
And I think that's the biggest thing is regardless of where you currently stand, right? There's ways to improve your situation. If you want to be a homeowner, it may be hard work. You may have to sacrifice a little, pay down some debt, really change your life in order to get credit under control. But as long as you're willing to do that, create a good team around you or yourself, you can be successful.
Yeah.
You can be successful.
That's so true. What you got, John?
I don't got anything, Joe.
Don't got
Joe did it. Joe's
wrapped
good.
it up in a
Joe's
bow,
the man.
didn't he?
We
Yeah.
got the bow on it. We got some hope here. I just want to know, so I think this went pretty well.
Yes.
Do I get to do a number 3? Are we
Look,
coming back
you
again?
gotta come back again.
We might make this a quarterly thing. Like, we're here.
Absolutely. No, so guys, if you have any further questions, we're going to put Joe and John's information inside this live in the comments. Reach out. If it's you didn't want to ask a question on the live, you'll have their information so that you can speak with them as an individual, and just do it. That I think that was the the key around all of this was just don't sit back and, not talk about it. So let's talk about it, and let's get our credit together so we could buy these properties and we could own the land, because every billionaire owns real estate. So don't forget that. So y'all have a great night, and we'll see you next time. Bye.